Hello, everybody. How we doing today? Awesome. I saw a few good executions in chat today. That was pretty awesome to see. Nice trade, Joe. I saw that. Called a bottom. That's awesome. I am doing good as well, Seb. Thank you for asking. Let's jump right into it. Right? What were we looking for based on the weekly outlook? And yes, it was not posted. The recording was not shared, but I still for the ones that were here during the live event, we had two clear outcomes that could go. We either expected Monday to go up and then start going down, or Monday to go down and then go up. And what would clarify those ideas were simple. Daily power of 3. That was all I'm looking for. I'm going to refer to this 4-hour chart, so I wanted to show it to you guys because there is higher time frame SMT and was the whole day, right, at this specific level. And I'll show you guys when ES took out that level, which was last week, right? So we had SMT pretty much everywhere, right? And going to our daily chart, we can see how that looks, the SMT specifically. And yes, it does jump over to Monday, but it was here as well. We can just look at the highs of the candle and notice that effect. So we had SMT on the highs. We also had, if you look right here, this is our daily candle. We had the midnight opening out here. It doesn't show up correctly on a 4-hour chart, I believe. So let's look at it on a 1-hour chart. You had open, then you went higher, confirmed SMT at this level by not taking out this high, while ES formed, I believe this was an equal high, and YM took out this high. So you had SMT at those specific levels, but you also had SMT right here. So we can compare, what was it? I believe it was this high compared to this following high. Yes, so equal highs versus higher highs. So you had a bunch of divergence at this high in confluence with daily power of 3, accumulation through Asian range, manipulation in London, so you would expect New York to be your daily distribution and to reverse based on London. And what does that form? Well, very specific. We look at the range from 2 to 5 a.m. That's why I dropped down to a 15-minute chart. I feel like it is clearer. So we'll look at the range from 2 to 5 a.m. We'll mark out the high and the low. As we can see, the high has been taken out and the low remained open for New York AM session. Also, you had confluence by understanding that these are relative equal lows. This is inducement, and we had a clear objective at these relative equal lows right here. So that was what I was looking for the morning, and more specifically, I would have liked to long after this. Taking into account NFP week, it is only Monday, a long would have been a little bit quick on the trigger, if I can say it like this. You guys saw in general, I hope, I shared the long idea that I wanted to be trading. I already made money on this down move, so I'm not going to be trying to make more money on the day. I'm happy, I'm going to secure my profits, so I did not trade the long, and it would not have reached our low-hanging fruit objective. We'll look at it in a second, but it perfectly reached equilibrium and then continued lower, as we can see. But based on our higher time frame movements, we can understand one thing. We just took out external range liquidity right here, right? We just took out range at the external end, liquidity at the external of our range, referring to this specific range. So now what are we going to do? Well, we are going to retrace. When SMT is present, and I'm talking about lower time frame here, but we had a higher time frame SMT, which is an even bigger confirmation. And where are we going to retrace to? Well, first we need to retrace to a discount. And right here, we have no clear discount in efficiency because we have a very large order block candidate, as a friend of mine likes to call it. So we are looking for this order block to be respected. And we look at two specific levels, mean threshold and the opening price, since there is no fair value gap close to it. As for ES, my drawing is wrong. Since there is a fair value gap next to it, we would utilize the full candle to count mean threshold, and we would utilize the wicks to find the specific level we want to see respected. And as you can see, NASDAQ traded quite far into it, reaching mean threshold, while ES did not. That is another sign of divergence of strength. So ES was much stronger to the upside, but I believe that NASDAQ still offered more R, which we will jump in a second. Just diving back into our 15-minute, we have beautiful divergence at the highs, right, as pointed out. But with your London framework, you then have 15-minute PD arrays that never got disrespected until we started pushing to the upside. So I just want to point out that once this high has been put in, and more specifically at the time this high has been put in, because we had 9:45 and 10 a.m. news, our 9:45 Judah swing made us put the high of day, and then we retrace back into the bearish order block, 15-minute again. I'm going to mark it out because we are going to use this level on our lower time frame in a second, into a 15-minute order block to cause a trend reversal, or how I like to call them, a continuation of this initial move, which formed a market structure shift 15-minute breaker block. You did not have any fair value gaps, but you did have a tiny little inverted fair value gap. So you did have a 15-minute unicorn right there, but that's just some stuff I like pointed out for the intraday traders or the swing traders. But for me, it was more about catching the swing on a lower time frame, so that's what we'll dive into right now. As I've said, we had 9:45 news, so let me just mark that out, 9:45, and we also had 10 a.m. news. News can do multiple things. I will not be going into it, again, for the same reasons as I always tell you guys. There is no point. It is too much, too soon for many traders, and I want to make these calls for the traders that are not yet profitable, right? If you're already profitable, you understand that news can have multiple effects, but it is way easier to always look for manipulation within a news. 9:45 caused the Judah swing higher, taking out liquidity, and of course we had our SMT at this level, while also having lower time frame SMT as a confirmation. So let me just mark this out. When people are questioning, how do you know this is the high and then that now it starts dropping? Just go through it with me, all right? We have SMT on our lower time frame, so we have higher time frame SMT. If you take into account time, you understand that there is a news, and that is when you would expect the manipulation to happen. That would then cause your distribution. Specifically at this time, we formed these highs before expanding lower with displacement. We displaced through all this price action that we've been doing overnight, went all the way down to our 8:30 and 7:30 lows, which are more important than others. ICT likes to say it all the time because it is an overnight Judah swing heading towards London lows. Let me just mark those out so we don't get confused with all the drawings, if I can say it like that, towards London lows. But what entry did you have, right? Because you did have a breaker here, you did have a unicorn, but if you're waiting 10 minutes after the news, let me just mark it out a little differently. There we go. If you're waiting 10 minutes after the news, then you would not enter right here, right? If you do have the understanding, it is okay to enter here, right? You retraced into a premium. I like to utilize OTE in these specific events, so I would utilize the bodies and look at OTE. And if I just move that to the right for a second, you'll see that we barely tapped the tick above OTE before expanding lower, and we had our premium PD array, the first premium PD array, which was automatically respected and overlapping with our breaker block. You had your unicorn right there, but you had news, you had time. So for myself, I missed this first trade, even though I am allowed to enter on that news candle, but this was the main opportunity. So I still want to point it out, and then we'll look at how I adjusted to the fact that I couldn't take the trade. I'm going to place my stop right here. Why? Because we are looking for 3 PD arrays to invalidate our idea. We have fair value gap, plus the inverted fair value gap right here, which lines up just with the high of this candle. So I'm going to place the high the stop loss at the high of this fair value gap, utilizing ICT's 3PD array rule. You had London low as a low-hanging fruit objective for 3.47R. Oh, I was not meaning to move that. And then you can held all the way to the 4-hour order block. So I still wanted to point out this trade because that is the interesting trade, in my opinion. That was the intent. And by the way, when I see consolidation after entering in a trade, a deep retracement like this, I like to just go break even. You're going to be way happier with having a trade being broken even than with losing a trade. Having it trade all the way back here makes it higher probability that it will be taken out this high and then expanding higher, taking out these highs, and that you were wrong with your idea. So don't be scared to get broken even a lot. It's okay to get break even. It's actually way easier on your P&L curve of your account than taking losses on trades like these, even though they could become a winner later. But enough about this specific trade. Once you had your retracement to a premium, more specifically OTE, into our 15-minute order block, that is something that has to be pointed out because our 15-minute candle ended at 9:45, and then the 10 a.m. candle started trading into this 15-minute order block, and that first candle also traded back into it, respecting this level. This is it giving you a clear indication that we are respecting our 15-minute order block, so we would be looking for lower prices, right? Respecting it, trend continuation of this first expansion. But now, enough of that. Where did I enter if I did not enter here? Well, very simple. I took a continuation entry. I was waiting for the same model to form on another leg to catch the second leg, the expansion of my market maker sell model. And where did that form? Well, pretty simply. I'm going to mark out 10 a.m. open very quickly. And let me just put it correctly. There we are. Daily power of 3 was very clean. So let me actually find right here the daily power of 3. I want to make it purple because I can see it better that way. Open midnight. There we go. So daily power of 3 was clean. In confluence with that idea, you would expect expansion lower and lower prices, and we did have a reversal day, a PM reversal higher. That's okay, that happens. We're not talking about that at the moment. When we are in the morning, you're expecting daily distribution lower. And then I would like to see my 4-hour power of 3 do the same. And we already looked at together the 4-hour movement, right? We already explained it. I'm not going to go over it again. But you want to see your 10 a.m. candle do a confirmation of that. So if you're looking for a setup lower, you first want to see it put up a high. That high was put up right here. But then you started consolidating, right? We went back and forth. There was a lot of divergence within these highs and lows, which means what? When there is SMT on both sides, we are consolidating, search and destroy profile, wait for invalidation of a PD array to then get on side. So I'm looking for lower prices. So I want to wait for my entry model to appear. That's the thing with the unicorn. It will not appear if it is, yes, sometimes it won't work. Of course, you can't trade every breaker and it will work. But if it appears on side, it is the highest probability entry model. So you can trust that if your draw is correct and a unicorn appears on your side, it will most likely and more often than not deliver to your objective. And that's what we've seen. So if you waited for bearish breaker to form, I don't see any until when? Well, very specific, until this level right here. And yes, you can tell me that this is a bearish breaker. Oh, sorry, I was drawing a line. This is a bearish breaker right here. So you would use this high, low, higher high, and then this move lower, broke the lower low. Sure. But if you're entering on any movement here, for example, you're entering at this specific level, your stop is here. So you still would have made it. But for me, that was not a good enough entry. If we look to our objective, that is 0.72R. So that is not something I'm looking for. And more specifically, we did not even close below this low. So that would have just been too late if I'm entering there and lower probability. So I waited for it to provide me a better entry or to leave without me, which sometimes happens when you miss the first entry. So I am going to mark this out right here. We can barely see it, but we did sweep these high by tick. I'm looking at top left right here, 18709.75 and 18710. So just one tick above, it's showing you up to what point it did not want to go back up there. And if we look to our right on ES, we also had SMT at this level. So I'm going to remove this and mark it out as SMT, but there's not enough room for text, so let me just mark it out like this. So our setup was there. We had SMT, then we formed a breaker block right here. And what do we have right to the left of it? Well, we have an inverted fair value gap. Let me put that orange. I like to put it like that. Did we retrace back into this inverted fair value gap? No, we did not. Which one did we? This one right here, which was an overlapping inverted fair value gap of this breaker block, right? Swept the highs, displaces past the lows, and then retraces back into it at this level. When I'm trading like this, I don't even look for a retracement because it's better if it doesn't retrace into it. So yes, I do actually take a breakout. And it pains me to say this out loud. I take a breakout trade on inverted fair value gaps because, as I've seen, oftentimes they won't retrace into it in the best case scenario, and I couldn't understand why. And then I learned what breakaway gaps were. And this breakaway gaps does not, and it's even better if it does not get traded back into. It will be used later, of course, but I don't want to see it traded back into right now, and that causes a low resistance liquidity run, as you can see. Just look at any very big move like this, and you'll see that we have not retraced into either an inverted fair value gap or a fair value gap. You can see it just to the left. We did not retrace back into here after inversing it. So that's a little bit of sauce for you guys. I don't like waiting. I just take it. And if we look all the way here, where would your stop be? Well, at this level, you had the inverted fair value gap, the order block, and the liquidity above. So you did not, inverted fair value gap, and the order block. So you would have it stop right here for, let me just make sure that is correct, for 2.49R. Let's just call it 2.5. And yes, I do round up a little bit sometimes. That is okay. It is in line with your 4-hour power of 3. As you can see, we flipped the open, forming the highs with SMT, and then expanding lower to your London low because you do have a London framework. Overnight Judah swing, London reversal, New York reversal. Sorry for my words. It takes everything into account. You have your news Judah swing twice. Your first displacement, you're taking a continuation entry here. This trade was perfect. Of course, the other entry was better. As I told you guys, I missed this because of the news. And for beginners, I would say wait 10 minutes after the news, right? I have released everything that I suggest about the economic calendar through a PDF. It's available under projects and Rise Model. If you guys want to find it, I believe I linked it in this week's announcement. But for me, that was the trade I took today. So I just still wanted to showcase it. And that is the trade I want to see a beginning trader take. So maybe it's not for all of you guys, of course, but that is definitely the highest probability entry that I saw for this morning's down move. Make sense? I just want to make sure you guys don't have questions right now because that's the type of thing that you guys could, well, not remember at the end. I'm not seeing anybody type, so I'll take that as a good sign, I hope. And I will delete these drawings, take this out my way. After we took out London low, you would have kept a runner break even. At least that's what I like to do. My main objective is done. I take out the main portion of my position, and then I hold for a higher time frame objective like this for our order block. And as we've seen, we tagged mean threshold while not tagging it on ES. I believe we still had SMT on the lows. We did, of course, in the daily, what we showcased, right? SMT right here. Let me just point it out. This and this. And we also had the inverted fair value gap on ES that we just got done trading back into pretty much. So I could be looking for a long at this point. The other long I pointed out was right here. Taking time into account, 1050 to 1110 macro can spool against profitable AM traders, which have been short, clearly. So what do you see on the 1050 to 1110 macro? Let me just point it out for you guys very quickly. 1050 to 1110 macro, you see a unicorn form, first expanding lower, retracing higher, taking out this low. Sorry, I'm going quick through this one, but it is not a successful trade setup, so why spend much time over it, right? But right here, you'll see our breaker block, beautiful respect of mean threshold of this breaker block. And what do you see? Your first overlapping fair value gap. This would have been used as your entry. This was all shared live during general. And how much did we run from this? We were very bearish today, clearly. Now we can see with hindsight, we ran a total of 47.25 handles. So if you're trading this, you better be expecting a retracement. This is a retracement. Why? Daily power of 3, 4-hour power of 3, higher time frame order flow. Everything was telling you that we were going lower after London, right? On New York Open and with the news into effect. If you were taking longs here, you need to revisit that and understand why you were, because this was very bearish, first of all. Other than that, this trade setup did work technically, because if you use the 1 minute range, you'll see that we did head for low-hanging fruit objective, clearly, of our latest expansion leg. But as we are mechanical and we utilize mechanical rules, I would have used the 5 minute range. And as we can see, if I go back to 1 minute, we retraced exactly to equilibrium before continuing lower. And I would have said, as I always say, to use your 5 minutes to find your low-hanging fruit objective, and there is nothing here except this start of the order block, more specifically a mitigation block right here. So that would have been interesting to me to trade back into it. I actually had it on my chart as mitigation partial. So I wanted to see it trade higher first, but it did not. And as I said earlier, right, if you see it consolidating, I recommend to just close your position. So let's just say you entered right here, and stop would be fair value gap. Then you had fair value gap here. I believe this is a small inverted fair value gap, but anyways, I'm never putting it at the low of this candle when there is a swing low right to the left. I'll let it trade it into this order block all the way down. You could have bagged a little bit right here if you had that as an objective, but as I said, I do not. But once you see it consolidate this much, then expand, but here it is invalidated 2 on-side PD arrays and then starting to respect bearish arrays. This is your ability to read order flow that tells you, hey, I should get out of this trade. So at least if you don't want to get out, you still believe in your trade, put it break even if you didn't lose money. Why? It ran, as we just saw, oh, that's not the right tool. I was trying to measure. It ran 47.5 handles to your entry. That's almost 2R. If you're up 1.86R and you let the trade reverse on you, I can tell you that is not something most profitable traders do. Maybe someone makes it work. I don't. There's never a trade. Well, there is never. If there is a trade where I am up 1.86R realized and I didn't get any money out, that is fine. But that I lost money on that trade, that is a mistake. I do not see that trade as a successful trade. Of course it lost, but as a good trade, because not because I lost money on it, but because I went so all the way on my side and I managed to lose money. As I said in the beginning, don't be scared of getting broken even. Right here, you put your stop break even, not after this first expansion, because it could retrace lower and then continue higher. That's okay. But after you see this move down, manipulation, and then expansion higher, I'd be fully out at this low. But if you don't want to, just put it break even. Make sure you do not lose money on a trade you want to hold, mostly because of emotion. Because if you looked at everything and you looked at your highest probability objective, which is -1 standard deviation of this, and more specifically, you would use the bodies to understand that, hey, this is my reversal range. Why would you use the bodies? Because that is the most precise standard deviations that are. It's breaker block using bodies. You want to know that? Head to my Twitter, standard deviations thread. I posted all the data so people would finally believe it. But enough about this long that would not have worked, but it's very important as traders to be okay with having a trade that does nothing sometimes. You just got to be able to accept it. If we move lower, yes, there is a continuation trade you could have taken with the lunch macro, but again, as I always say, I'm not going to talk about that because you don't want to be entered here. You want to be entered here. And if you did not enter here, of course, because of news context, here is your last chance, in my mind at least. Because if you're entering here, your low-hanging fruit's already hit. So what are you going to target? All your trade is going to be bullshit because you're not trading the daily expansion. You're trading the end of the daily expansion. So to me, that is just not interesting. What could be interesting is a beautiful PM session lunch trade. And yes, lunch can be from noon to 1:30, but it can also be, for a lunch trade specifically, you can also look at the range from noon to 1. Because sometimes when our higher time frame objective has already been met during lunch, it will not wait until 1:30 to start expanding. As you can see, it often comes as low resistance liquidity run, consolidation, and then a power hour expansion. You don't believe me? Go back to this specific lunch trade. And yes, I'm zoomed out on purpose. I don't want you to see the specific candles. Just see the movement. Concentrate on the movement. One lunch trade, expansion, consolidation, and then power hour causes that final expansion. This happens very often, and profiling is a big part of trading. But as we've just noticed and shared, lunch trade on the low. So where would you target? Well, the highs of the lunch session right here. Let me just mark it out as your target, your objective right here. And what could you also utilize to gain a better target? Well, you have your daily expansion here. So you can look at your premium and efficiency, and so random, it lines up with your, let me just mark it out correctly, with your lunch high. Because all the time frames, everything you see, every single idea is all the same thing. Your retracement, and you're retracing into equilibrium. This is where you will retrace before going lower. And look what we did. We flipped it, making it a breaker block, retested that level, and kept expanding. You want to see more random shit? Just draw premium and discount on every daily expansion. Draw your inefficiencies, intraday inefficiencies, intra-week inefficiencies, 15-minute, 1 hour, and look how we utilize them in the following days. Pretty interesting stuff there. But successful lunch trade. And what did you have as an entry? That's where it gets a little more tricky. Because as we can see right here, we expanded pretty uncontrollably. So we never retraced into this inverted fair value gap. We did in this one, I believe. No, not even. So we did not retrace into this one. And we did into this one. Or no, because we did not click above it. Okay, yeah. So, sorry. I was just remembering all the stuff that happened. The only entry that it gave you was super deep. And I believe I had one of my friends and students tell me that he saw it and he was too late or something, if I'm not mistaken. So did not take it, but your real entry was around here. I souped this more specifically, and yes, there was no SMT at this level, but I was very confident with this move higher because time-based liquidity is everything. And this level as well. Yes, we closed below it. I'm looking at a 1 minute chart with a 4 hour specific level. This is the wick of the 4 hour candle I want to see. This is my closing wick, right? Because my 4 hour candle opened at 10 and is going to close here at 2. So what do we want to see from a candle? We want to see open, high, low, and a retracement to close into the new candle, which then formed as open, low, hard expansion, and then settlement, which is a tiny bit different than just a retracement to close. But just the confluence from this specific level, we are within my 4 hour order block. I see a lunch trade, I have my mean threshold of my order block being respected. ES did not even reach it. So yes, you could prioritize ES, but as I always say, I like NASDAQ. I don't know what it's all about. Maybe I'm just not used to trading ES enough, but I usually just trade NASDAQ unless a specific week where ES is much more clean. But all the way up here, the first entry you had was way higher. Yes, I would utilize this in proximity of this breaker block, but this is also a breaker block and the breaker block that formed your lunch trade. So you could also utilize this. Then you had the inversion of the fair value gap, the retest of it. No matter if you're entering on this candle or this candle, it is still the same entry. I'm just saying if you were late, your entry is on the inverted fair value gap no matter what. Let me just mark it out correctly. Here, I'll put it a little above. And then what PD arrays would justify your stop? Well, I have my first inverted fair value gap. If I go lower, I don't see a fair value gap on this point, and I also have another inverted fair value gap. So my stop would be at this level. Here's a little something for you guys though. This is an inefficient candle because it never formed a low. Why? I don't have any bottom wicks. And when that happens, I see these candles be a very clear objective. So I know it is stupid to just shave off a few things, but I know that if it is trading inside of this specific fair value gap, it is going to go rebalance this. So I'm either going to put my stop lower or higher, and I'm expecting a low resistance liquidity run. So when I post executions and you guys ask me what my stop was, and I tell you, well, it was this inverted fair value gap, just put it at the low of this candle, it is because I see things like this. Low resistance has to be answered by low resistance to create a balanced price range that we will not go for. And I utilize failure swings to determine low resistance liquidity runs, but also inefficient candle, because price will want to rebalance very quickly these candles. So if we invalidate this, and also allowing it to trade down into here could be another option. So you could put it at this low, but again, same thing, right? I'm not looking for it to trade all the way down here because it's not going to stop. It's going to expand all the way here. So the truth is, I wanted to see this inverted fair value gap remain open, and I'm allowing it to trade a little bit outside of it, more specifically to the low of this candle. So that's how I decide, by the way, when I have stops that are not utilized by the 3PD array rule. That's how I do it. I'm going to go back to showing the stop that the mechanical approach showed, again, to show you guys what it could have done. You can use this final expansion range to find a low-hanging fruit. That's what most people like to do because it is the easiest to get money out quickly instead of using the full daily range, right? I'm going to utilize my last expansion range. Let me just try it correctly. I had the low wrong. And what do I see from this last expansion range? Well, I have a 5-minute fair value gap right here. If I go back to my 1-minute chart, this 5-minute gap could have been a great low-hanging fruit objective. I believe it even barely offered 2R, just a little under. Could have left it just trail into it by a few handles. I believe that is one handle, 1.5 handle, all the way to the end of the order block. That's funny that that lines up. Gives you your 2R. So you had a beautiful low-hanging fruit. I honestly like to just place limits, so it would have been 1.96, which 1.94, sorry, which I am okay to round up mentally to 2R. That is not something that will affect. And we inverted this gap, consolidating within for a while until we reclaimed consequent encroachment and started expanding higher all the way to our lunch highs, which would have offered 5.48. So from today, you see that you had a first short opportunity if you traded before news, another short opportunity with a conservative approach, and then a long opportunity. Why do I like to showcase all of these? Because for someone who wants to stick to the conservative approach, and more specifically to only trading in the direction of your bias, both setups work. That is why you will never have clear data on the Rise model. I will provide it with every single setup. But when you're trading it on a conservative approach, you're not trading every setup. You're only trading the ones in the direction that you want. And also, I just forgot to mention that long that would have stopped you out, hopefully break even, but would have been a loss if you did not get stopped out break even. If you only trade in the direction of your bias, anyone had a setup today. Anyone trading the rice model. Some people might have taken the early morning short. Some people might have seen, oh, well, the morning expanded down. I didn't get a long opportunity, or maybe they got stopped out right here. But then they made their money back in the afternoon. Because our bias was not wrong. We just hadn't reached our higher time frame objective yet. And once we did, and once time aligned with price, expansion occurred. So you see, I'm sorry, I'm just very happy that I can get to share this with you. And now that every day I'm just showcasing the same models over and over again, the same setups. And you've seen, I show the losses too, and there are very little losses. And oftentimes, no matter your bias, you could have just traded any setup and made it work. Because if you take the entry, the highest probability entry model there is, as I said, it will oftentimes head towards your objectives, and sometimes I don't know the objective before the trade. I see the setup, I see everything line up, I see time agreeing with it, so I'm like, oh, well, shit, it's going down. Let me take a piece of that. And then I go to my 15-minute and I look at, oh, but where is it going down to? And then I find it, and that's what I mean when I say I adjust to price. So a lot of little trading insight here today, just trying to give you guys as much value as I possibly can. I hope you guys appreciated it, but this was a very clean first day of the month. You usually see way worse conditions most times, but a nice little start to the week. I'll definitely be concentrating on preserving my capital now that I've had these 2 winning setups today. I'm very happy with that. I could end my week with that, so I'm going to be risking $1,000 of profit for the whole week. I'm going to be trading $50 to $100 positions, just taking it easy on NFP week. Did you guys have any questions before we end this call? We've been in here for 37 minutes. You guys lasted long. So I'm guessing that if you're not sleeping by now, you learned some interesting stuff. Hoping you guys learned some interesting stuff. I do not see anyone typing. Oh, Chris, you have something to say. First time watching. I'm very glad to have you with us. I see you have the little newcomer badge. That's awesome to see you here, brother. Well, thank you to you, right? It's my pleasure to do these, honestly. Sorry, it's a little taken off guard. I really like doing these because you got to think that these are a journal for me too. And posting the recordings on YouTube will also serve as proof of my journey, of who I am as a trader and how do I trade, right? So it's my pleasure to be doing these. I love when we can just get together and learn some new things, share my knowledge. And as I said in my trading video that is on YouTube, I am in a position where my knowledge can provide value to others. And that gives me a lot of pride in my work. So I love to share it. Just a little bit about myself there. But I'm glad you enjoyed it, and I hopefully we'll see you again in these calls. You guys have a great night. Good luck trading tomorrow. And as you guys know, this week we'll be seeing a lot more of each other. So I'll see you guys for tomorrow's price action review. Have a good night, guys.